Hello and good morning, folks. Welcome back to Almus Market Mornings with Shikhar Garg, and we begin the data-heavy week for the financial markets. Now, the data stream started by the end of last week with the US inflation update. Headline inflation was down, but the core inflation continues to stay high. Even the manufacturing activity was dropping. On Monday, the Treasury Secretary Yellen states the US needs to reach a conclusion on the debt ceiling before June 1st to avoid any default. But there's a lot of things for the Fed to digest. And on the relief side, we see the JP Chase ending First Republic Bank's turmoil. So a lot of things have happened over the weekend. On the domestic side as well, we have seen a set of good data updates with the GST collections hitting new all-time high at 1.87 lakh crores in the month of April. Even the factory activity hits the 4-month high on the robust demand from the Indian side. So, Indian macros have been good while they are still struggling on the macros for a lot many economies. So, JK, what is your take on these fronts?
Good morning, Shikhar. Yeah, I think, as you said, a lot of things to digest starting last Friday. Uh, starting with the US inflation number, where the core inflation was still sticky, and we had services side inflation, which was also higher. Uh, so there's no comfort for Fed from these numbers. And then again, yesterday we had the PMI numbers released by both ISM and the S&P Global. ISM still continues to show it in contraction territory, though it improved over last month. But the more comprehensive S&P Global indicates that it has pushed into expansion territory. But importantly, both the reports actually show the prices component going up substantially. One more reason for Fed to be worried. And adding to these worries were the employment cost index, which went up by 1.1% in the last quarter compared to 1.1% the previous quarter. So wage inflation is not relenting. Jobless claims for the last week was actually down. Now the debate is now, while 0.25 hike by Fed tomorrow is given, what he will say about the future policy approach is where the debate is now surrounding. And more likely, in my view, he is not going to talk about FRs. He will probably say more data dependent, and that is how it should be, because there is no clear sign that the economy is contracting on all fronts, and there is a recession which has already hit us or something like that. So the economy is reasonably doing well still. Therefore, he would be reluctant to call for a pause, and that would change a lot of things. In fact, we have already seen the longer end in the US Treasury yields go up substantially, particularly in the 10-year and the 30-year. And at the same time, in Europe, we had some soft data on GDP in Germany, and also the inflation somewhat coming down, which all led to the German yields dropping by nearly 17 basis points, 10-year I'm talking about. And the differential with the US is once again slightly widened. So that actually has meant that the euro is not able to build on its rally above 1.1050. Then we have Jones data today, which will give more clues or more evidence to Fed about the economy, and particularly on the jobs front. And they will also have the ADP job numbers tomorrow, which will again be some more evidence to the US Fed for taking their call. As I said, I think it's one of those very difficult meetings for Powell to handle, because it is expected that there are varying opinions among the Fed members, who will some want to continue with more rate hikes. Somebody like Bullard has already, though he is not a voting member, he still called for rates to go up to 5.75%, while others would like to pause and stay hold for long, and a few in the market also expect rate cuts. So it's a huge array of expectations that we are seeing about the Fed policy, which is on the anvil tomorrow. And we also have it's also a week where we have more Fed central bank policies to in less than or nearly about an hour. We have Australian Central Bank, which is likely to announce the rate policy, where they are likely to keep hold on to a pause at 3.6% because they are concerned about the economy slowing. And on Thursday, we have the ECB meeting with data from Eurozone starting to show some sort of a mixed picture. The debate is now narrowing down to either 50 or 25 by the ECB. I am on the side of 25. I think they would like to watch more data before, obviously they are nowhere near any announcing any pause or anything, but they could probably go slow after having already raised rates by 50 basis points for three meetings continuously. They would go probably with the 25 this month, this week. So all in all, we have all these central bank guidances and decisions that are influencing the markets. And because of so much, and then of course we have the jobs number which will come on Friday, and that is anyway a big event that would will also govern how the Fed will go about in the future. So on Friday, we had Bank of Japan also announcing no change in their policy, and they are only talking about a midterm review of the policies that Japan has implemented over the last 3 decades and how it has, helped or not helped in guiding the economy and effectiveness. And so any changes on these fronts will come about quite late. So we are seeing very heavy data schedule week. It may not reflect in big moves in the currencies, because until market digests all of these, we may not see any breakouts. But on the whole, on the dollar, I feel it looks a bit oversold. And with the data from US coming more on the positive side, and also Fed more likely, more or rather less likely to be on a announcement of pause, I think dollar has some um, covering to do. And as you said, even the debt ceiling talks have been, now should put a deadline on June 1st. Beyond that, we also read Biden has called for a congressional meeting on debt ceiling talks. So this will be something that the market will be watching for. So don't see any fresh directional move for the dollar. If anything, dollar can recover some of its recent losses against the major currencies. We have already seen it quite performing well against the Chinese yuan and a few other Asian peers. On the yields also, I feel they are going to be in a range for until we get a clear direction on the monetary policy. We have at stock market, despite fears of recession, doing well in the last 4 months of the year, and last week was also a positive week for most of the markets. So, but no big moves, but they are holding on, mainly taking cues from the corporate numbers. On the Indian front, of course, we have the slight bias in favor of a stronger rupee, because flows are very, very steady. We have had a good FI flows of more than $1.6 billion in the month so far, in the month of April. And apart from that, we have been seeing steady inflows from corporates who are raising money abroad, and any upticks are getting sold because of these flows, and it's not really a speculative move. The downside being only contained only because of RBI looking to contain the strength of the rupee. As you mentioned, there are several domestic indicators like GST collection hitting an all-time high. We had the manufacturing PMI at a 4-month high of 57.2. And then the railway freight also posted a sharp rise to touch an all-time high. So the domestic economy is doing well. Several factors are actually working in favor of rupee strengthening. Dollar index has been, at the lows and of multi-month lows. Inflows have been there from FIIs, and we also had the corporate, bond issuances, which are planned still, and the pipeline. Crude prices have slipped and from the recent peak. So all these things point to rupee getting more traction on the downside, or USD getting more traction on the downside, but it's all subject to how the central bank wants to guide. Possibly because of the short covering that can happen in the US dollar index, even USD INR may see some corrective up move towards 81.90, and if it goes up 82.10, is going to be a very strong resistance for the same. Not expecting a break beyond these for the dollar rupee right now. Thank you.
Okay, JK, that was quite good. And yes, folks, the week is going to be a bit on the data heavy side. We have three central bank meetings, Bank of Australia, Federal Bank, and the ECB meetings during this week, along with data releases on the NFP and job side, current account deficit for the US markets, labor market numbers, and euro inflation, along with the other set of activities from the central bank. Now, there's also, if we have to talk about central banks, there's a debate between a 50 basis point hike or a 25 basis point hike for the ECB, which we shall be finding out this Thursday after their update. But on the US front, if we'll have to talk about, there's sort of a mixed bag of data updates. But overall, as DK mentioned, it looks like that the dollar has been a bit on the oversold side, and there can be some sort of corrections that can be observed. On the domestic front, we have seen good set of steady flows from the FIs and the corporates, both on the uh, both supporting some sort of strength in INR. But overall, macro picture also states that there is some good demand over there in the economy, and the performance continues to stay good. Lastly, just to put things into perspective on the banking crisis, a year ago, almost a year ago, SVB, Credit Suisse, and the First Republic had almost $1 billion dollar in equity. And today, if we have to see, the shareholders have largely been wiped out. So, one of the only reason, or the primary reason, being the significant rise in the interest rates. So that's how things go about in the financial markets with such heavy or significant changes. But that's that for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for joining.